Hello investors, welcome to Business Learnings. In this video, I'll talk about one common mistake that you must be avoiding as a retail investor. 99% of the retail, probably more than that, retail investors do that mistake, and this mistake costs them dearly. You know, to be honest, when I had started my investment journey, I had also done the same mistake, and I really wish that I hadn't done it. So what is it? It is making your investment decisions based on borrowed conviction. What is borrowed conviction? Borrowed conviction is making your investment decisions based on what you hear in the news, based on what you watch in the TV, based on what you watch in YouTube, yes, including my channel or other channels, based on what you read in Twitter or Telegram, and you know buying or selling based on that. It does not work. Why it doesn't work, I'll tell you. I'll give you a very solid example. Let's take the example of Bajaj Finance. The stock is a multi-bagger. It has given great returns in past, and it was close to 5,000 rupees in February this year. In March it started falling and went down up to probably 1700 or 1800. There were a lot of people who were talking bad things about this company, that Bajaj Finance will further go in three digits, probably 800 or 900 rupees is its fair price. It's anyways overvalued. Now think about an investor who had invested in Bajaj Finance purely based on the things that he heard about the company, and he hadn't done any research on the company. He hadn't gone through the annual report, hadn't really gone through the numbers, the revenue numbers, the return on equity, and everything. Uh, he simply made his decisions based on sources. That Bajaj Finance is a good company, it multiplies, it's a multi-bagger, that's why I should be buying it. This person had bought Bajaj Finance earlier, and now Bajaj Finance has dropped to 1700 rupees. The news is that, oh, this company can go on, probably will crash to 800 or 900 levels. Since this person doesn't have the confidence in the business, he'll end up selling this company in the hope that if it goes down to those levels, 800, 900 levels, I'll buy it again. Probably coronavirus is an unprecedented situation, and it will really impact this company in the worst possible way. People will not be able to pay back their loans. They'll end up defaulting on their EMIs, and Bajaj Finance will suffer a lot, and probably I'll buy it later. But did it happen? It didn't happen, because this company has a strong franchise. This company has a very strong name, and when the markets were crashing, when other NBFCs were defaulting out, this was the NBFC which was acquiring customers from other NBFCs. And this is not the only reason. If you do your own research, you will at least find 10 to 20 solid reasons to keep on buying this stock at whatever price. And since our guy, he didn't do his own research, he bought this company simply because of borrowed conviction. It didn't work out for him. He didn't have the confidence to hold the company. He didn't have the fundamentals. He didn't understand the fundamentals of the company, and that's why it was impossible for him to have that confidence. That's why he ended up selling it. And after he sold, see where Bajaj Finance has gotten now. It is probably at it's 5,200 levels, 5,300, I guess. Now this person will be thinking right now. This person will be thinking that probably this was a good stock. It was not bad. It was a good stock. I should have held into it. Probably I should have bought more when it was at 1700, 1800 levels. I did a grave mistake by selling this company. Now everyone is talking that Bajaj Finance is such a good company. Other minor NBFCs are wiped out. This has came out as a winner of this pandemic, came back stronger, more customers now, it will grow in future. Again a mistake. Again this person is buying based on borrowed conviction, based on because media is talking positive about it, people are talking positive about it. His Twitter feed, Telegram feed is filled up of positive news of how this stock got tripled in the past 6 or 7 months. Again a mistake. If you want to invest in a company, please do your own research. Have your own set of solid reasons. Whenever you do a research on your company, have at least 5 solid reasons that why are you buying this company and why you should be holding on to this company. When the markets start crashing again, you go through all those 5 parameters and analyze whether anything has changed, whether the fundamentals have changed, whether uh, any of these 5 statements are not true. You're free to extend this list to as many points as you can. The more research that you will do, the more reasons you will find to hold this company or to not hold this company. I want you to do that rather than functioning on rather than putting your investment decisions on borrowed conviction. And if you do that, you will really make a lot of money in the stock market. People do not do their own research because it takes time, but let me tell you, it's not that tedious. And once you do it for one company, it will become easier for the next company, and it's relatively easier to track. Once you understand the management, once you understand the fundamentals, you don't have to do much. You just have to keep following up after every quarter, after every quarterly earnings reports are published. That's not much. And to help it with you guys, I'll probably start posting videos on how to do fundamental analysis, at least how to understand the business, so that it could add some value. So yes, this was it for this video. I hope it was helpful, and please like, comment, share, subscribe if it was helpful, and spread this video. Thanks a lot for watching.